Okay, today we are going to learn about charge against profit, and appropriation of profit. Can you tell me the financial statements that are prepared by a partnership firm? Financial statements that are prepared by partnership firm. Don't know? So when I talk about the financial statements that is prepared by a partnership firm, the first financial statement that is prepared by a partnership firm is called the trading and profit or loss account. Do you know about this? A little bit. The second statement that we prepare is called the profit or loss appropriation account. Okay. Then we prepare partners capital account and we prepare partners current account. Do you know about this or no? Partners capital account and partners current account. Okay. So our basic focus is we need to know what is the difference between charge against profit and appropriation of profit. Okay. Now when I say I prepare a trading and profit and loss account, so this is how the trading and profit or loss account looks. How does it look? What is there in the trading and profit and loss account? It starts with the opening stock, and you have the purchases, you have the purchase return, yeah, you have your carriage inwards. Over here, you will have your sales minus your sales return. You might have goods for own use. What is goods for own use? Goods taken by the owner for personal use. You can have goods lost by fire, goods lost by fire, flood. What else you can have? Goods distributed as free samples. Goods distributed as free samples. So all this you can have over here on the credit side. And one thing definitely that you should have on the credit side of your trading and profit and loss account is your closing stock. Are you with me? So this is goods going out of the godown for sale. This is goods going out of the godown for other than sales. Okay, so anything that is going out of your godown is recorded on the trading account which side? On the trading account credit side. Then the profit that you get because of trading. When I say the profit that you get because of trading means you have purchased over here, you have sold over here. You have purchased over here, you have sold over here. The profit that you get because of buying and selling is called nothing but it is called your gross profit. Okay. Suppose your credit side total is 2000, your debit side total is 100. Can you tell me what is your gross profit? 1900. So how do you find this gross profit? This 2000 you will write on both the sides. From this 2000 you are going to remove the 100. Your gross profit is 1900. Can you tell me where is this gross profit carried forward to? Where is this gross profit taken ahead? This gross profit is taken ahead to an account which is called the profit or loss account. Which account? Profit or loss account. Profit or loss account brings down this gross profit over here. So this becomes by gross profit. This becomes by gross profit brought down. Okay. Profit and loss account is of the nature of nominal account. What is the nature of profit or loss account? It is nominal account which records on the debit side all expenses and losses, and on the credit side it will record all incomes and gains. So profit and loss account records on the debit side all the expenses and losses, and on the credit side it will record all the income and gain. Are you with me? So on the credit side of your profit and loss account, you have something which is called all your other income. That is, you will have rent received, commission received, discount received. So all these things you have on the credit side of your profit and loss account. How about the debit side? Purchases and sales. Everything related to purchases and sales comes over here. Okay. You have this gross profit which is brought over here. Okay. Now, on the debit side, what you have is called something which is named as charge on or charge on profit, or I could say it is charge against profit. When I say it is a charge against profit, that means when I say this is a charge against profit, what does it mean? When I say it is a charge against profit, what does it mean? Okay. So when I say it is a charge against profit, it means that it is a definite expenditure. What does it mean? That it is a definite expenditure. It has to be incurred. It has to be incurred irrespective of whether there is profit or whether there is loss. Okay. Let's take it with one example. Supposingly, I have this institution over here, which is dot education. Are you with me? In this dot education, I have to definitely incur some amount of expenses. Right? Can you give me examples of those expenses? Tables, furniture, these are capital expenses. But can you give me examples of some recurring expenses that happens regularly? Rent, electricity bill, okay, the phone bills, the internet bills, salaries. They are my teachers. So salary to the teachers. Okay. So when I talk about these expenses that are definite expenses, it has to be incurred whether you make a profit or a loss. These are called your charge on profit, or I would say this is called charge against profit. Okay. So whenever they tell us that certain expenditure is a charge on profit, what is it? A certain expenditure is a charge on profit. It has to come from the profit or loss account debit side. Okay. So when I say it is a charge on the profit, what do I say? Charge on profit or charge against profit. These are all your extra expenditure, like your salaries, your discount allowed, office expenses. So everything that you have to pay outsiders, That means these outsiders are not even bothered whether you're earning profits or losses. They are just interested in the expenses. They are just interested in their fixed pay. Are you with me? So income, if your income is greater than your expenses, then you earn something which is called your profit for the year. Or you could say you earn something which is called your net profit. So I will write this to net profit. Okay, suppose this is 3,000 and this is 800. What will be your net profit? This is 3,000 and your expenses is 800. What will be your net profit? Your net profit will become 2,200. Okay. So when I say it is a charge against profit, or I say it is a charge on profit, it usually is an expense that has to be incurred and it is payable to outsiders. Are you with me? Say there is a charge on profit or charge against profit, the expenses usually belonging to whom? The partners or outsiders? Outsiders. Because the outsiders are the people who are not concerned whether you make a profit or a loss. So even if there is a loss, and there is a charge against profits, you have to incur, and it will come in which account? Profit or loss account, debit side. Which side? Profit or loss account, debit side. There is one expenditure which, even though we are giving it to partner, it is treated as a charge against profit. What is that one thing? That one thing is the most important thing where you treat your partner as an outsider. You treat your partner as an outsider, that is called interest on loan. So this is an expenditure even if there is no partnership deal. If your partner has given any loan to the firm, interest on loan is a charge on profit. This is the most important thing that majority of the people, they tend to forget because it is the loan given by the partner. They treat it as charge, they treat it as appropriation of profits. But interest on loan is not, it is a charge on profits. This is one expenditure that has to be given to the owner. Partner is the owner. I am giving him interest, but still we treat partner as what? Outsider, and we give him interest on loan, and it is treated as charge on loan. Okay? Then you get something which is called your profit. What is it? Profit. How much is your profit? 2,200. Okay, come on, tell me, where will this profit go? First statement that you made is what? First statement that you made is the trading account. Next statement that you made is what? From the profit and loss account, what have you derived? Profit for the year. On the debit side of the profit and loss account, you had what? Charge on profit. That means the expenses that is given to outsiders. But there is one exception to it, where the owner, the partner, is treated as an outsider. What is it? Interest on loan. Where is this net profit now taken to? This net profit is now available for distribution to owners. Okay, so this is the profit after all expenses. Now it is belonging to what? owners. So this net profit now belongs to the this net profit is now belonging to the owners. So this net profit is now belonging to the owners. It will come in an account which is called profit or loss appropriation account. Okay. Which account is this? Profit or loss appropriation account. You will write over here by net profit. Or you could say this is the profit after interest on loan. By net profit, or you could say this is profit after interest on loan. With me? Now this profit belongs to the it has to be given to the okay. Just be mindful of the words that I'm using. This profit belongs to the owners. It has to be distributed to the owners, or I could say it has to be appropriated or apportioned between the owners. So when I am distributing this profit to the owners, I will distribute over here. That means I am going to give it to them over here. So this is called appropriation of profits. What is it called? Appropriation of profits. So when I get the main profit, this main profit I am going to give it to the owners. So when I am distributing the profit to the owners, it is called what? Appropriation of profits. So when there is no deed, when there is no partnership deed, this full amount, how much we got 2,200 will be shared equally. When there is no partnership deed, there is no interest on capital, no interest on loans, no salaries, no commission, nothing. Okay. But if there is a partnership deed, I need to appropriate profits. Okay. Appropriation of profit happens between who? Firm and owners. So this main profit is appropriated to the owners. So I will from this give what? I will give salary to A or B. I will give commission. I will give what? Interest on capital. So this is basically what? Appropriation of profits. So charge against profit is for outsiders. Appropriation of profit is for owners. Okay. If there is no profit, there will be nothing given to the owners. Okay. But over here, if there is no profit, still this has to happen, and we will get a loss. But over here, if you don't have profits, you don't distribute. Are you with me? With me? So your appropriation of profits happens for owners. Okay. And over here, salary you get commission, interest on capital. Say if you have interest on drawings, where will you write? On credit side. Because interest on drawings is income for the firm. Okay. So it will increase the amount of appropriation. So interest on drawings I have for A and B. Because this is 2,200. Interest on drawings was 100 and 100. So this became 200. This is 100. This is 500. Okay, this is 50-50. So 100. And then give me the total of the credit side. 2,200 plus 200 is 3,400. 2,400 minus 700. 2,400 minus 700. 1,700 is your profit. The remaining profit after appropriation. What would I say? This is what? Remaining profit after appropriation. This is also called your residual profit. Which profit it is called? Residual profit, or it is called your net divisible profit. What is it called? Okay, so this profit you will distribute to share of profit. You will distribute it to A and B. How much is the 50%? So this amount you are going to share between the partners. How much will it be? How much price? 850. 850. So this, whatever happens in the appropriation account is basically what? It is appropriation of profits, or I could say it is distribution of profits only to partners. If no profit, no appropriation. I'm repeating again. If you have no profits, you will have no appropriation. But if you have no profits over here, charge will still be there. This is the difference between charge against profit and what? Appropriation of profits. What is the difference between? So appropriation of profits happens between the firm and partners. So for the firm, I will make profit and loss appropriation account, and for the partners, I will make the partners capital account. Now understand. Whatever is expense for the firm is on the debit. So whatever is expense for the firm is received by partners. Whatever is the expense for the firm is received by partners. So whatever is on the debit over here will come on the credit. Whatever is on the debit over here will come on the credit. Okay? Whatever is income for the firm is paid by partners, so that will come over here. So interest on drawings will come over here. Interest on capital will come over here. Whatever is over here on the debit. Salary, appropriation debit, capital credit. Commission, can you say? Appropriation debit, capital credit. Interest on capital, capital credit. Share of profit, salary, commission, interest on capital, share of profit, interest on drawings, capital. Other than this, on the capital, the first thing that you have is your balance begin down, and over here you will have your drawings. If you don't remember, you say C for capital, C for credit, D for drawings, D for debit. Okay. So can you tell me what is the difference between charge against profit and appropriation of profit? Charge against profit is for expenses of outsiders. Appropriation of profits is what? It is just distribution of profits. Appropriation of profits is what? It is just the distribution of profits. This is expenses of outsiders. That has to happen, whether there is profit or no profit. And appropriation of profit is what? Distribution of profit. So we've learned the formats of trading account, profit and loss account, profit and loss appropriation account, and the difference between charge against profits and appropriation of profits. Okay.